Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it back. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I am like super late. I am so sorry. I don't know what my deal is. I've just been like really off past few days. I guess I'm still a little sick. I worked out yesterday. So sleepy afterwards. Anyways, we got a market that's moving here right now. Well, so we just had the numbers. Real personal consumption month over month, negative 0.4 versus 0.3. So a little bit worse than expected. Personal income, spot 5 versus an expected spot 5. And continuous jobless claims, 1.328 versus a 1.318. And then the U.S. PCE price index, the big one, month over month, spot 6 versus spot 7. So the inflation numbers are slightly better than expected. And what I'm seeing here, reactions off of this, S&P 500 had a little bit of a jump up, and the Treasuries had a little bit of a jump up. And I have to say that given how far off the numbers are from the market expectation, it seems like an overreaction. It's a much stronger reaction than I would have expected based purely off of the numbers. It must be the case that there were a lot of positions, maybe people hedging themselves for inflation to be bad, and that's why the treasuries are buying. Well, that wouldn't make sense because then they would sell. I don't know. I can't explain it. I can't explain it. It seems like an overreaction to me, though. We do got the quarter end going on right now, so this is where things kind of get interesting. Like coming into the charts, we were expecting the S&P 500 to move up into the quarter end. And overnight, we just had like a pretty decent dump down, not anywhere close to lows or anything like that. But they are risk off this morning as we go into the quarter end. Here's the treasuries. Treasuries just buying up there like quite aggressive. I mean, they're well above this June 10th. I forget what event that was. I think that was the CPI, right? And then coming over into the other assets, oil is down after a big drop yesterday off of, I believe, a draw, right? I haven't been following that too close. And gold and silver, despite interest rates getting significantly lower than they were, gold and silver continue to languish. What is there? I'm starting to look at this and like there's got to be something going on with the supply and demand that we're not aware of, because it just continues to be so bad over in gold and silver. All right. And then we're coming over to the currencies. Bitcoin taking the dive below 20K now. Pretty convincing drop that time. Man, I'm hearing all sorts of crazy stories like that. One of the funds that got liquidated had other people's monkeys on loan as collateral. Like, what? It's just so stupid. And then the dollar looking pretty strong, touching 105 at points. So this is the world we live in today. It seems to me like with the treasuries that, well, I don't know about after that news, but overall we're probably got an okay setup to go long in the treasuries. Although I think that before I would be if I take a trade, I'm going to be waiting for it to calm down significantly. But yes, those numbers, they seem mostly in line, but the market did move quite aggressively off of it. So we'll see. All right, time to blow the nose. I feel like that my voice is way better today, but it's still quite raspy. But that might just take a little bit of talking for things to kind of loosen up and everything, right? Breaking market news, ECB to reinvest PEPP proceeds where spreads have widened. So the ECB trying to tackle this divergence between the large and small European country bonds. And again, sorry for it's always like I come in and I'm late and I'm like, wait, how am I this late? But I think I spent a little bit more time eating than I have been. I've also been spending longer in the shower. I was ruminating a lot in the shower over video games nonetheless, so not completely focused yet, right? Well, there you go. The treasury's coming almost all the way back. Good morning, Tobias. I'm a little concerned. I mean, I can see the possibility of the treasuries turning into a sell today. Could happen. I don't know. I would expect there to be a pretty significant moves for the end of quarter. And I would expect that to be buying in the ES and maybe even buying in the treasuries. But right now they're kind of saying no, that maybe the rebalancing is already happening. Since hitting a peak of 5.3 in February, the core PCE has now dropped 60 basis points. This is the third favorable inflation reading in the last week after the Michigan inflation expectations were revised lower and Germany's June CPI fell short, says Carl Quintilla. So what is this? Inflation lower, sell gold. Inflation higher, sell gold. Make it make sense. It's the orders. Something's going on over there with the orders in gold. A beer made from recycled toilet paper is winning at my... okay. I don't think that I would drink that. Is it made from... like, how is it made from recycled toilet paper? Like is it like... fermented water? I don't... That just... I don't even want to think about that. How is that a thing? How is that a thing? Man, well, it's just like at the peak of the bubble, like the peak of the streaming bubble, right? And Belle Delphine selling her bath water. Except for that, like now we're at the bottom and people are still getting away with crazy things. I don't get it. And that feels a lot better. That blew my nose there. Oh, that is so much better. Oh my gosh, I sound better too. Wait, hold on. Hold on. And good morning, Octavius. Well, there was like an opportunity for a bounce post news here at 118.015. The volume distribution is still pretty random. So I'm not necessarily looking to get involved yet. I'll let it cool down. In fact, I might wait until 7:15. By the way, you want to hear something interesting? So the other day we were saying, oh, we need to talk to trading technologies. Surely they can get us the broker tech data, right? So he asked me to start, are you only looking for the data or are you planning to trade their markets as well? And I said, oh, I only need the data. And I told him what I'm trying to do. And he says, okay, we can deliver broker tech data to you via the fixed protocol. The standard service is coalesced at 100 milliseconds can be delivered over the internet. If you need anything faster, we can do it, but it requires dedicated hardware and either cross connects at the exchange or direct connects from your location to TT's presence at the exchange. And then per session, $300 monthly for 250 instruments or less. These are TT's fees for providing the data, but you will also need to be pre-approved with the exchange, and their fees will be additional. So $300 plus the exchange to get broker tech data through trading technologies. And it just seems to me, well, I on one hand, it kind of seems like that's cheaper than what I maybe expected. But it also kind of sounds like they're basically creating a connection just for you. Like they do not have a service where they regularly give broker tech data to people. I think we should. I'm going to tell him that he gave me the information that I needed. I need to pursue some other angles, see where we can go. I still need to figure out a way. I'll speak with the guys at the CME. And I guess we need to talk with interactive brokers too, right? But there's got to be somebody in the US that is like broker tech specific, you would think, right? I don't know. That's really interesting to me. Well, maybe there's an opportunity there. You want to trade. Well, it's probably not a thing because there's probably not a lot of opportunity there for you, right? Like the number of people out there that could be like actively trading on that market is pretty small. And I'm going to bet that all of the people trading on broker tech right now are people at the large banks. So really what we need to do is we need to talk to a big bank and have them convince them to let me trade for them. Micros. By the way, I'm not really getting a whole lot of activity in the these new ones. 3.15 seems silly. Yeah, it is silly. Think we can fix it a little bit? Come on. Come on. If someone wants to hit into me at 3.14 5 year. No, we can't coordinate trades, but it would just be lovely if I got filled there, I think. That guy is not moving. Come on. Come on, you know you want to. Look, the treasuries are moving up. What about the 2? Well, okay, so the 2 isn't as bad, but it's still pretty bad, right? Oh, I saw one move there for a second. Carl Quintil is saying the 2-year is below 3%, but the on the run is not. Just want to note again that because it is the end of the quarter, this is when one of the payments that if you held a note, you get 2 coupon payments a year, and this is when you'd be getting one of those coupon payments. So that is kind of leading to a larger than usual difference between this on the run and the next on the run treasury. So it could be that the other one is already down there or something like that. Reboing an 11? See, those offers are still just hanging out up there, which is crazy to me. I'd like to know how they're calculating this, how they're getting their number, because their offer just seems silly to me. If I cancel it and then put it back, does it let me? Okay. And we'll go again, we'll do 10. In fact, I'm willing to go. Actually, I'm probably willing to get almost all the way in there. What you gonna do now, huh? You gonna still sit up there with your crazy offers? Boopy head? Oh. Did you see that? I had my offer was there, 26 added on behind me. When I canceled my order, they canceled theirs. Look at her go. Okay, well, there's something working it with me now. Now that offer is like, So I'm definitely toying around with a robot here, right? Must be the same robot putting the bid at 25. Core PCE inflation falls for 4th consecutive month. Trading Floor Audio says, good news for Fed. Yes, it is. Well, should I have been taking a trade over here in the 10-year? Probably. The spread over there is a little bit silly too, though. Apparently Putin is speaking. It was pulling a little aggressively there. I think I will. Really? Okay. You're fading the ZN move? You're selling it? Oh man, okay. I have a hard time seeing a sell today, man. To be honest with you. Mean reversion is the name of the game lately. Well, so we've had a couple of days where there wasn't really very good reasons to trade, right? But I don't think that that applies today because number one, we got we got an okay PCE reading, right? So it was like the fourth straight month of declining PCE. So that's really good for the Fed, and that means they don't have to be as aggressive about raising rates, and so that alone is going to be a buy. And then you got the quarter end stuff. It seems like the trend has been up, and that's the way that they're going to go, but we'll see. Really. Okay, so somebody is starting to bid at 0.69. Narrative is PC is not slowing fast enough. I'm not seeing anybody say that, but I mean, I could see that being, one case. I kind of want to. Oh, you pansy! Oh my gosh. So like there was some other robots putting liquidity up there and everything. And then I decided, okay, I'm gonna cancel my order. And they all disappeared again. But there was somebody that was kind of starting to bid 3075 and he disappeared. So I don't think that the best bid is actually down in here. I could probably try putting an order there. Yeah. See that? It's messed up. See, this is why I need to know what the actual rate is. I can't just rely on what they're doing. Okay, see there it showed up at 3075 again. Like I'm having fun playing with you guys here in the 5-year, but I don't necessarily, unless somebody really hits into me and I get like a really good price and I can just pull out 10 ticks easy, that would be great. But I want to fix things over here and then try and fix them on the other instruments. Like look at the 2-year. 2 years pretty bad. 30 years pretty bad. Okay. I don't necessarily want to be first in line. Well, Treasury is coming back quite heavily. I don't think that that is in line with my thesis of some decent buying coming in today for end of quarter, does it? The volume has been quite wishy-washy, and overall the 10-year is selling at the moment. And the change in volume is more significant than the change in volume was at the news. Suggesting, okay, whoa, did you see that? So there was another robot who was hovering a ton. This is such a stupid game. Okay. Okay, so Joe Biden is giving a press conference in Madrid at the moment. So you can see even in the 10-year it's kind of bad. It must be that people are still trading the June month, huh? So we might have to wait until tomorrow. That's a little better. But again, if I cancel my one order, hey, stay there, don't move. Oh, come on, pansies. I think right now only big surprises will give you sustained moves in the 10-year. That might be. It could turn into a. So my thesis going in here today was that we should see a trend based on end of month rebalancing. The order flow that we have seen so far today is I think not in line with that thesis unless there is going to be like a strong sell. But as I see it right now, it's kind of suggesting to me that things might be wishy-washy over here. So we don't necessarily want to yeah. Now over here in the 2-year, I feel like that this spread is just a little silly. There's a 2-year, there's a 30-year. So let's line everything up. We fixed the 5. We convinced the robots to start playing in the 5. Should we try and do it in the 2? I'm not as confident about the 2 because when we were doing this in the 5, they were moving down. With this one, I'm not so confident that that bid is actually good. 3.014, somebody's flashing to me. I don't know. What do you guys think? So let's just turn this off. I had a dream last night that like I was misclicking multiple times. Like I made a ton of money from misclicking, and then I lost a ton of money from misclicking. So that was a it was a vision. It was a sign from God telling me to have to be careful. Keep your things, be careful about having everything set up right so that you don't misclick. Yep, I think it was. Scott, how are you? Good morning. All right, let's do it. So I'm just kind of trying to see if I can get them to react to me. Really? See, somebody was up there at 086. They're like, no, it's up here. It's up here. All right, fine. Listen, Mr. Market Maker friend here. If you want to help me, just let me just hire me. Right? You're working for some bank. Just hire me. I don't ask much. I just want to trade micro treasuries and bring the spread in. That's all I'm asking for. Huh? And I think methinks 029 is probably too light. Well, they are now in the 10-year and certainly in the 5-year below the news price. Walter Bloomberg, Biden says NATO will defend every inch of NATO territory. Excuse me. News Squawk replies, isn't that literally the point of NATO? Yes, you are correct, sir. Oh, man. I'll do it in both of them. I don't give a. Okay, he's saying, is he saying yes at that? 097. Do it 097. Fine. Okay. Now, what? You're gonna go all the way to 9th? Come on, bro. Don't do me like that. That must be somebody else's. One of these days, I'm gonna get filled and it's gonna be ugly. Hey, what's this? 3050? Who's that? Hmm. On July 13th, Coinbase Exchange will be unifying USD and USDC order books. That is bullshit. As part of the unification process, USDC order books will be merged under USD order books to create a better, more seamless trading experience. I wouldn't trade that combined book. No way. You kidding me? Okay, so 5-year is 2-year is becoming a little bit more reasonable. 30 is still a little gray. Treasury's still kind of giving us the mean reversion look, huh? By the way, Alex, did you make money off of that? Did you take a profit or what happened? Let's see here. What oh, I missed Kaka's message here. I gained $70 after over a week by minimizing my risk, but then I lost $10 of that money. Is that still good? Well, sure, but like how many trades? You know? I have to say, if it's less than 20 trades, you can't really consider it significant at all. Just confirming that I truly only have that one order sent out. I wonder why there's bids sitting all the way down at 063. I wonder if I run these guys if they react to that. No? Because this guy sitting up here still flashing. The way he does it is almost like the way this robot is working is almost like, here, Seth, put it right here. We'll let you be at the front of the queue. But I think it really is just a robot. Okay, we ran the 2-year is getting more reasonable. That was weird. I had to click twice to cancel that order. See, in this instance, I know that the spread should be smaller, but I'm unsure which side I should try and bring it in on. 2 or 3 trades I was trading Dow futures with $100K. Oh. So you're trading 1,000, you gained 70, lost 10. Hmm. That sounds like a sneeze in Dow. Oh, Anthony Grudelli is going to be on the Ninja Trader channel. That's cool. There is activity in the 10-year now. I mean, it's kind of suggesting to me that maybe the 10-year will go lower, but I'm not 100% sure. Should I be bidding this up? No? He just keeps showing it to me at 088. So why do you think that in the 5-year, nobody wants to put offers out? Why is the robot only putting in bids? He's moving it up too. So what do you think? Lower? I tell you, when somebody came in here and first said, "Oh, I'm selling it right now," I was like, I don't know if I can see that one happening, because I guess I would still kind of favor the long in the treasury, because the PCE number was good. I don't necessarily know which way the end of month rebalancing is going to go. So that might be a problem for me really taking an aggressive trade here, right? Hmm. Hmm. Okay. I'm kind of wondering if we need to pull up the Vista here for this one. Shall we? Undock it. Hey, look at that. Look at that. Interesting. So the spread came in there. I canceled my order. The robots all moved them way lower. It looks like they're trying to hold 118 evens hard. Yeah, I don't know. Like the thing is that the profile is still really random looking, right? So I'm not getting a really clear like indication of like what do we say, like institutional activity, let's say. That's a little better. Now we need to fix the 30. So once again, I have to ask why? Why nobody on this side? Hmm. Hmm. Like honestly, with the way that it's been behaving here, with the way that it's behaving, you could probably take either side. Okay, I guess LaGuard is going to be speaking here in a bit. I wonder if the 5 and 10 is really that inverted, or if our on the run 5 is just really mispriced. Do you recommend 4K monitor, or 1080 1440 is okay? So I think that 1440 is okay. I don't really like 1080s anymore. I don't feel that for productivity that 4K is really worth the bump. So I think that right now 1440 is really the sweet spot. So you can still get high refresh and all that sort of thing. Okay, so the spread in the 10 is getting tight now. Pretty happy with that. But what do you do about the 30? How do you solve a problem like micro yield futures? My voice isn't good enough to sing. No. What the heck? Okay, Bitfinex hosts. Tomorrow, institutionalized investors are suddenly going to allegedly send billions of dollars to Tether. And Bitcoin prices will suddenly shoot up over 20% out of nowhere. Don't listen to me. I'm literally guessing. I think he's trying to be honest. I think that he is literally guessing. But what is it that's making him guess that you would do it tomorrow? So we'll open up the Vista on this one. Could be fun. Come on. Lexi, I'll put it in there. Oh, look what I did. Look what I did. Hey, they moved. They moved up. Uh-huh. Uh-huh. I've decided to go bid since it's been a sell the other way. Now if strong buying comes into the 30-year, then I gotta bail, right? Are you planning to trade nano Bitcoin futures? Nah, probably not. I'll take a look at them. Maybe if there's something, it does sound like that you could actually get like a reasonable risk profile with them. But I'm kind of to the point of like, I don't really think that, okay, so like here's the thing. You're in the micro treasuries. If this goes against me, okay, of course we could get a trend if I'm doing something dumb, but it's pretty unlikely to just like really plow through me and me lose like $50, right? That's why, we're not getting any volume in these instruments. I'm kind of like, okay, yeah, I can put this here and mess with it, right? But Bitcoin futures can move so quick, right? So the whole thing is like, where is my edge going to come from? I have to be able to predict future orders. How do you predict future orders in Bitcoin? Because it is at the end, like in a regular market, you can predict the actions of large institutions because you understand how those institutions work and they have rules and stuff, right? But Bitcoin, the big players, they don't have such rules. They can just do whatever they want on a whim, right? So it doesn't make a very good opportunity, I don't think, to try and predict where things are going to go, rather to be a short-term speculator. You could be a market maker over there in Bitcoin, but I don't necessarily see it. Okay, so I think that I can move this. Oops, I need to do this. There we go. Right, our other instruments seem to be doing okay. Should we try and bring it up within 5? Okay. We doing our little dance. oil taking a plunge there. So Biden was saying he wasn't going to beg oil producing nations to produce more oil was a headline that I heard. I was like, I don't know if that means anything. But apparently it did, because oil is taking it on the nose pretty hard here at the moment. By the way, after me being like, what the hell is up with gold? That just makes 0 sense whatsoever. Well, gold shot up eventually. Probably due to the dollar. The dollar's coming back pretty hard. Yeah, that had to have been because of the dollar. Yeah, that's weird, because then they just tick down. Oh man, what did they do in the 5-year? Man, they were doing so good. Did somebody actually take it? Yep, that's what happened over there. Somebody actually took a trade at 090, buying it, huh? Oh wait, was the offer really 090? Oh shoot. So that means that we should be able to like yes. Oh, you're taking every demand? Oh, hold on. Let me cancel all my orders here. Make sure I'm flat. Move this thing up over here. Here's the S&P 500 opening up. And make sure that all of these are off. Okay. She says, don't wake him up because he'll be mad. Yeah, it's a good point, Tobias. From a market making perspective, you could probably just hold. You could probably just arbitrage Bitcoin off of the S&P 500. He's gonna wake up, isn't he? He's gonna wake up. He's gonna be so mad. So you see how in the 30-year when I removed my bid, I kind of started doing funky stuff. Did you know they found 31 million tons of gold found in Africa? I did hear about that. So, one thing you got to realize about that is that like, it's not like it's 31 million tons hitting the market all at once, right? That's just, a slight increase in supply, and their ability to actually like produce that gold at a reasonable clip is pretty small. So my understanding of it is, at least, is that the impact that it has on the overall supply in the market is somewhat small. But gold hasn't been moving. So gold continues to go down, so maybe it is that supply that they found that's one of those factors. I don't know. I kind of feel like that with the way that it's been moving, that it would be something else in gold. But I could be wrong. Overall, the demand for gold is just not there, is it? There we go. I got him to fall back asleep. Well, good call for anybody that bought at 118 and has been overall range bound. So am I what to do? Big yawn. And be careful, don't scratch your face. Hey, can we bring this down here? I think you'd be happier if you bring this down here. There you go. There you go. Okay. That's funny. They were sending them on the way. They were on the way to the school. No, 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 dog. Don't stay in here. they were in the car. They were driving, and then they got a text that they're going to start band late. Okay, so that spread on the 30-year, hey? Well, let's try and analyze the flow here a little bit, shall we? It's been a little bit what do we say, wishy-washy in the treasuries. We had a pretty big jump off of the PCE news being, okay. And then they fell back into the liquidity hole and then shot back up. At which point, it appears that they sold it pretty hard. And you can see, particularly in the 30-year, but also somewhat in the 5, that they did sell it. And then in the 10-year here, it was quite a bit smaller. It was maybe about 5,000 contracts. 28, 22 to 28, so like 6,000 contracts. 6 or 7,000 contracts. Now we're kind of floating back up, but none of the treasuries are going along with that. So if we pick our point right here, one of the big things that I'm noting is that that point where the treasuries started floating back up was when oil started moving. I assume off of Joe Biden's comments. So, And then was the dollar start moving because of that too? No, the dollar seems to be different. So it does seem to be a slight bid in the treasuries because oil is coming down. That's where I think we're at right now. So if we are to put an order in here, I think that we're probably better off still doing a bid. We'll try bringing this bread in here again for our robots. See what they do. Why does it say 1LQ3? Interesting. Because they're pushing up there pretty aggressively, huh? All right. Oh. Oh, really? I'm surprised they hit me like that. Hmm. The S&P 500 is getting hit pretty hard here. Fine. Look at that 30-year go. 30-year is at highs. Well, Treasury's coming back down, and the 10-year actually kind of breaking the most recent range, but the 30-year looking pretty aggressive on the buy side. And S&P 500 looking pretty sad. Oil recovering here a little bit. So oil recovering might be why the 10-year is falling a little bit. Yeah, let's see, that 5-year seems to be selling it. Are we getting some flattening coming in here again? Is that why? What columns do I have open here? Do I have the volume profile open? Yeah, I do. But for some reason, it doesn't show that order, even though it clearly happened. Oh, somebody got hit there? I'll take that. Thank you. Thank you very much. Dude. When I got hit, that made me a little bit nervous. I'm surprised that they took that. But like this is the way it's supposed to work. Oh man. I know that that's just like a stupid $15 trade, but that was so fucking cool. Guys, why aren't you sitting out here with your one lots, man? When the spread's like that big and you know which way it's going, you can sit out there with your one lots. I can't believe that there's somebody sitting there with an offer at 16. See, they was like, okay, I got my thing. All right, I'll provide you the liquidity. You want to sell some at 3.16? I'll sell you some. It was awesome. Right? Somebody wanted to make a move. We helped them out. I don't know why, though, my order. So where did I get it at again? 3175. But you can see here, I got filled. It's not showing up on the volume profile. Shall we go back and look at the chart in 30-year and see if we can get it to show up? 30-year micro futures. And I will do a 1-tick chart in the past day with a box. Actually, not even a box. Just do line on close is probably better. That's not encouraging. Look, now this guy at 316 is holding it, right? Look at that. So what happened there? Somebody hit into me and I got a fill at a price that was like way ridiculously above what it should have been. It was the easy edge right there. I mean, I didn't. It would be better if I knew what the correct, what the interest rate really should be, how accurate of these numbers really are. But just bringing it in on the edge when it's really, really wide, and I have a pretty good idea which way it's going. I guess it kind of came down. So I think there was a lot of luck in that one involved, but. I liked that, man. And then this guy started offering at 16. So it was like, once I took the fill there, somebody was like, okay, like, we're going to fix this. We're going to fix this. I appreciate it, sir. Not because you gave me $15, but because we want these spreads to be smaller. These spreads are ridiculous, right? These spreads are ridiculous. But probably somebody came in. Oh, look at that. Somebody filled them at 16. So now the offer is all the way back up here at 18.5. Oh, I forgot about the PMI. Oh, dude, I'm so dumb. Why did I not? Am I not? I don't know. My news squawk must have gotten screwed up there. So Chicago PMI 56 versus a 58, so worse than expected. You would think that would be a buy for the treasuries, but the treasuries are actually moving down here. So somebody actually let me out. I was lucky that I got out where I did, because otherwise I would be underwater like 15 ticks. Join me, one man's mission to decrease the spread, the bid-ask spread, and micro-yield futures. You're welcome, CME. You hear me? So I want to come in here. Let's kind of like increase the interval a little bit so that you can kind of see what we did. Was that where we took the trade? What is that line? I don't know. I don't know. Okay, so that's about when we first got it. So I'm gonna post this on Twitter and show it to the CME. How do you think Bitcoin will go? Well, so here's the thing. First of all, I have to start by admitting that like I have basically gotten to the point where I just despise Bitcoin, and I hate all of the scummy stuff that happened in there, and I just want to see it die. The Bitcoin ecosystem is in real trouble, right? Because the money is just not there. So there are still all of the major players involved. I think FTX is the largest one that kind of concerns me because they're talking about like literally buying Coinbase, and I'm like, what? Okay. And I don't think that they have they still believe that like the money is there and that the idea is there and that if they just buy the dip that things will go great again and it'll all be hunky-dory. But I think that the reality is at the current time is that one, Bitcoin is essentially a Ponzi scheme built on fraud, pumped up by money that literally does not exist. The only reason that anybody was playing with it to begin with was because they thought that they could get more dollars for it, right? They thought that the number of dollars that they were going to make, the number of dollars that they had would go up by investing in Bitcoin. That's what they really thought. And, so that's the problem. But since nobody's coming in regulating them, doing anything about it yet, they're still able to kind of like prop themselves up. Like, I really don't think that 20K should have held. I think that there's like plenty of room below for them to go even further. But since they're still able to print, it sticks there, right? Okay, so you would think, oh, that's good. Maybe here's a good place to buy Bitcoin, maybe. And the counter to that is that the macro environment is very poor for Bitcoin. So what you're seeing right now is that even though Bitcoin is fighting, and there's kind of reason to believe that they'll continue to try and fight it. These people injecting liquidity into the system by just printing more stable coins are ultimately losing the battle because the macro environment for Bitcoin is just so bad, right? We're in an rising interest rate environment where money is becoming more scarce. That the cost for money is increasing, right? So people aren't as willing to just throw money at it, and then on top of that, where are they going to get more people from? Because basically everybody bought in on that was interested in buying into this. I think bought in on the last cycle and is getting burned right now. So ultimately, I think that Bitcoin has lower to go. I think that 11K is probably like my downside target. And if they get to 11K, there's a pretty good chance that they'll go well below that. I always said that if we got to a position where I thought Bitcoin was oversold, I would go and I would buy it. But I'm not so sure anymore. I think that it would be a buy signal, but I just don't want to be involved in the space. I feel that at this point, continuing to speculate in it is just helping them continue to commit fraud, right? So even though I might have a good opportunity to buy it, I don't think I will. I think I'm just going to leave it for dead and hope that it never comes back. And, I continue to exhort regulators to stop dinking around. Stop dinking around, man. You let this go on because you didn't want to stifle innovation. You didn't want to be accused of being the ones that killed Bitcoin. Okay, Bitcoin killed itself. Now you need to step in. Now you need to step in and you need to protect consumers. You need to do your job. Because if you're not there protecting consumers in Bitcoin, what do you even exist for? Seriously, what does the FTC and the SEC and all of these organizations that have been created over the last 100 years by acts of Congress, okay, they were created to protect consumers from fraud. And here, the largest, most obvious fraud in history, and you're just twiddling your thumbs. Well, we don't want, dude, it's done. It's done. We know where it is. You need to move. What did Buffett say? If all he had was $100 and he could buy all of Bitcoin, he wouldn't? Yeah. Yeah. Well, but you understand his argument, right? Like, no, it's a good argument that it is not actually a producing asset. Just like gold is not actually a producing asset. Like look, gold will come up. I think that gold could be a part of your portfolio right now. It looks to me like if you've had gold in your portfolio over the past year, that it hasn't done anything for you. Okay, but maybe it was still prudent. But you don't hold that thing for very long. Like there's people that seem to think that you go and you buy gold, and then 30 years from now you'll be like super rich because inflation will continue to whittle away the money and you'll make more on gold. But that's not the way that it is. When you look at the full course of gold's history, your per year return is really poor. And why? Because it's not actually a productive asset. So I totally understand his argument, and I think it's a good argument. Something that you got to understand, really important to understand the way that the industry works, is that the higher the time frame is for your strategy, the more profit potential and the less risk you are taking. As long as you're not doing it leveraged, right? You can come in, you can buy something and then hold it for years and years and years and years, and you could, it can go all the way against you and you can still hold it, right? Okay. Basically, when you put your time horizon to infinity, you're taking infinite risk, and so your profit potential is higher, right? The higher the time frame is. So the biggest, most successful players are going to be the ones playing the long game. And when you're playing the long game, your ability to predict orders is like much more limited, right? You can't base it off of that sort of thing. You have to base it off of how good is the company, what is the management, or because the world is going to change. The world is going to change in ways that you and I just are not able to predict. But if it's a good company, they'll adjust, right? That's the sort of thing that Warren Buffett does, right? So that's always going to be his perspective, right? Is invest in good companies. You can't predict anything, yada 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 yada, right? What we do is fundamentally different, right? We are speculating, and we are trying to predict future orders on very short time frames. And guess what? You can do it. It's really hard. Retail traders, what we're doing is without the resources of a large institution behind you, maybe it's a losing game. Maybe it doesn't make much sense for you to try. But it can be done, right? It can be done, and you can predict short-term movements in certain situations, right? It's just that people like Warren Buffett, they're not going to bother, right? Because they can play the better game, right? We don't play that game because we want to trade. And for us, the amount of money that I have to put away every month is less than what you would put into retirement accounts. So it doesn't make sense for me to try and play like Warren Buffett. It makes more sense for me to just buy Warren Buffett stock, which is what I've been doing. Oh, bud, it's just fine. You're just fine. Look, isn't this great? We're having a riveting conversation. You just learned a lot there. I know. But you don't need to think about it too hard. That you don't have to worry about that for 20 years, right? The thing that you need to worry about right now is that you're eating enough food and getting better at that pooping thing. Yeah, because I know it hurts, but it'll get better as you get bigger. Okay. Yeah, and sleeping. Don't be like your older brother, man. It's so hard to get him to sleep. Man, has there still been some volume at 16? By the way, what happened to my oh, I have a super dom open? That's funny. Oh, because I still have that 3.052. Hey, it's oh no, that it's rolled. So liquidity in the micro 10 is looking not so shabby. I wish that the 30-year would come in, but I kind of feel like that with the way that it's moved now since, I'm not so confident about what I want to do in the 30-year. So I'm a little weary about trying to provide liquidity again. You know what, though? The trade that I made was super awesome. Hey, what's wrong? Just because you're a little bit awake doesn't mean you have to cry. No, it does not. Unless you're pooping. Are you pooping? No, I don't think you are. I think you're trying to get yourself worked up so that you can cry for food. Mm-hmm. There you go. Was that what it was? Was that the problem? Was that little burp? You read about blockchain technology, what it can produce and create? Well, so I know a lot about it. I mean, I'm a computer guy, right? I've been to conferences and where we talk about the algorithm and all of that stuff and how it works. So I'm very, very familiar with how blockchain technology works. And in my opinion, it is a shitty database. The technology is not actually that compelling. Almost every use case that they have created for Bitcoin works better with other technologies. I think the most compelling use case that I heard for it was minting NFTs for admittance to a concert. But like here again, the overhead and everything involved in running that, it doesn't make sense. Like you can do it with other technologies, and people already do it with other technologies, and that's why in the 10 years, this easy use case that you would have for Bitcoin still hasn't materialized, right? um, and then there's been a lot of other instances where they were like, oh, like here's a use case for Bitcoin, and they really really pushed it, right? But in the end, it was complete nonsense, and eventually that showed through, right? Like the whole NFT the OpenSea thing, right? The reality is that it's all centralized through OpenSea, to the effect that and we need to get more information about this, because I've only seen the tweets and that full stuff, but let's put this under unconfirmed. But it sounds like that they were actually like giving other people's NFTs to large institutions to use as collateral. Like what? Like okay, so doesn't that really means that the whole thing was not what they were saying it was at all, right? So yeah, and I mean this is kind of the thing that really turned me against. Well, I was always against it from the beginning, to be honest with you. But when I really started to become anti-Bitcoin was, you know, um, how do I put this? Like, oh, bud, it's fine. When I remember the day that it came out, and I was like, well, this sounds like a bad idea. But I was just like, well, I when I kept track of it, I watched Mount Cox collapse, and I was like, well, that's kind of fun. And then I kind of left it for dead. And then I started learning more about it in 2016, 2017, right? It was really more 2016. And the more that I learned about it, the more that I was like, this technology is crap. This technology is crap. Not only is this technology crap, but they want to make it worse. And that's what they did. They made it worse. So then it was like, well, you can make transactions with it. That's kind of cool, right? Like somebody else will come along and do it more efficiently, but it's kind of a cool proof of concept, right? And then they crippled the blockchain. So then it was just a scam machine. That's when I really turned on it. So it was in 2017. But at that time, I thought, well, I can kind of go along with it. I can make money, and eventually people will figure it out, and I'll help them figure it out. Now it's just like this has gone way too far. A whole generation has basically squandered their wealth. It is so scary to me. Like seriously, this is scary to me. You go on like some of these relationship subreddits, and there's all these people talking about either on one side, my husband blew our savings on Tether or Luna or whatever it was. And then the other side is, I lost all of our savings. Should I tell my significant other? Right? Like multiple people did this. It's literally like a generation's worth of wealth gone. And it was a generation that did not have much wealth to lose. Right? What's going to happen when these people retire? They're not going to have anything to retire. You better hope that you get a big inheritance from when your boomer parents die, because otherwise we're going to be screwed in 50 years. Not even 50 years. It's like I'm like 35. So it'll be more like 30, 40 years, right? Some people invest in ARK and lose 70%, and some invest in Bitcoin. Where is the difference? Well, so I was very against ARK too. I don't know what you do to protect investors from that one. I think that like honestly, the central banking is a necessary evil, right? And we don't completely understand it. I mean, economics is a science that where you basically you never get a control, right? You can't do experiments. And what happened was we did the right thing, but we did way too much of it. and that's having negative consequences for the rest of society. And yeah, it blew up a bubble that a lot of people lost money on too. Sure, for sure. I don't know what we do about that. Other than get better at central banking, which I think we are. But I don't. I like. Here's the thing. So I was there on TikTok. I was making fun of all of these stocks. Like literally, dude. Go back and watch the speculator Steve, or not stock market Steve, real stock market Steve on TikTok. That was my parody account, right? And basically every time that I thought that a stock was overdone and was going to and was touching its high, that was the stock that stock market Steve would push that day, and he was right almost every time. He was buying the top of almost everything, right? Like and then I was there on TikTok talking about how this was all dumb, and we were here on stream talking about how this was all dumb, right? What else can you do to get people to listen, right? The reality is that when everybody's in the mania, nobody wants to listen to the guy that's like, actually, this is a really bad idea. Like, you're not going to make money from this. They listen to the idiot that is like, oh, we're all going to be rich, blah blah blah, right? Riding the hype train. That's the way social media works. They ride the hype train. There's nothing I can do about it. Was ARK doing something illegal? Not that I know of. We could only say that she was managing her portfolio recklessly, that she was probably a victim of her own market impact, and that she's probably wrong about inflation. That's all we can do. But Bitcoin is different. Bitcoin, what they're doing is clearly illegal. Regulators, you've got to step in now. Now that Bitcoin has collapsed, you have to step in. Like yesterday. Is that Mom? So I'll be right back. The dog is barking a lot. Yeah, and that's he's like what, 3 weeks old now. Bitcoin get born again. I mean, that's the thing that scares me. The thing that scares me is it's gonna do poor in this macro environment. Everybody's gonna forget about it, but the regulators still won't do anything. Maybe they're paid off. Maybe they're just stupid. I don't know. And then it'll bull run again to 100,000. Congrats, thank you. I'm glad that we had a second. I say she was just lucky. Everyone looks like a genius in a ball. No, I think it was more than that. Sikau. So this is a good time to talk about this. Hold on. No, never. So you got to understand market impact, okay? So the general view that a person has about a market is, and I'm gonna minimize some of my DOMs here so that I can draw a picture and you can really see it, okay? I'll use yellow. Is yellow good? Let's do something else. Now white's probably too hard to see. Oh, we want to do a full. Maybe red. No, not red. Maybe just black. When are we going to see some green? I'm running out of cash already. You mean green in the indexes? Man, I don't know, man. The decline on overnight quite surprised me. Okay, so here's what most people think about the markets. They think here is the actual real price. Okay, maybe it goes up, maybe it goes down. And this is based on like fundamental information, right? They think, okay, the price will mean revert to the true value. Okay. So if I buy price up, it will be harder and harder and harder. And eventually, it will incentivize people to sell it and bring it back down to price. And then it will do this back and forth, right? Well, what we have found is that orders have significant impact, even if they have no informational content behind it. So, the fundamental guy would argue, okay, if the fundamental changed and then you buy it, then it's more likely to have a strong impact and stay up there, essentially. But if you buy it and there was no fundamental information, then price should revert back to the fundamental price. And this is the whole efficient market hypothesis. The reality, though, is that if you buy it, those orders have very strong impact at first. And then the more that you buy, that impact tends to trail off. Then there is a rebalancing function. This is like the post meta order impact regime change. There is a decay function like this that follows the 3/4 law. So this is to the 1/2. This is to the 1/2, and this is to the 3/4. Okay, and this will actually take longer than this. 2.5 times longer than this. Okay. And then it reaches an equilibrium. It will just stay there. So now there's this gap here between value and what our current price is. And then the next person is going to come in if they need to rebalance their portfolio or whatever, they're going to go from that price. Right? So this imbalance between what the fundamental value is can persist for very, very long periods of time. Okay, so this is the opposite of what people think it is, right? The market thinks that price is elastic, that it will come back, right? That the further away that it gets, the harder it is to stay there. The reality is that the market is very inelastic. You have an impact, and then that impact has a long memory. It stays, right? So what happened with Cathie Wood was that she did get lucky, right? She got lucky, and a lot of people started buying her fund because she got so lucky, right? And when that happened, she went out and she bought more companies. She bought more stuff with that money. And because she was buying stuff with that money, it caused the market to move up, right? There was no fundamental reason for it. Everybody thought that she looked like a genius at that time, but the reality was it was going up because she was putting money into it, right? So when the money came out of the system, and because of higher interest rates and so on and so forth, those stocks started going down. She then had to sell some of her stocks because they're losing money. And people take their money out of the fund and whatnot. That means that she has to sell even more. And so you got the same effect going the other way. All of these stocks get crushed because her fund is forced to sell them. So she was a victim of her own market impact, right? Like, yeah, she was lucky, but then everything after that first initial lucky play was basically her not knowing what was going on. Like, she should know this stuff. If you're an asset manager, I think that you should understand market impact, and that it should be something that you're calculating and factoring into your trading so that you keep your trading costs low. And what Cathie Wood did was she basically maximized her market impact and therefore maximized her own trading costs, essentially. And that's why they're down so much. Regulators are doing something right now, and regulation will help. No, I don't agree with that. So the problem with it is that there is money in the Bitcoin ecosystem that shouldn't be there. Well, rather, that doesn't exist. If regulation were to come in today and fix that, then basically the crypto market would have to decline to be in line with that reality. It would crash hard. It would crash very, very hard. So then there's this scenario. Then okay, but let's just say after that. Scott, you should come up with the speculator Seth equation for market impact similar to the Black-Scholes equation. I'll give it to you. It is this. I didn't come up with it. It is Y times omega, which is the volatility of the stock, times the square root of the size of the meta order over the amount of volume traded that day. And that is the simplest rule of thumb to determine market impact. Follows a square root law. See, it's a square root. Or you could say this to the 1/2, right? This to the 1/2 is the same thing as the square root of, right? which matters because the decay function is, Q over V to the 3/4. It's a very well established empirical stylized behavior of markets that has been found by the market microstructure researchers, and it's been known for a couple of decades, and retail traders just don't know about it. I don't know why, because it's pretty significant information, isn't it? Like, really, when we get down to it, we understand how the markets move. It just destroys so many things that people believe about markets, doesn't it? Okay, anyways, back to the Bitcoin thing. So let's say the government comes in, regulates Bitcoin. We have a huge crash because, the stable coins are removed from the market and everything else like that. Okay, but then Bitcoin has the opportunity to become worth more, right? Right? No, because here's what happens at that point. There is not enough money to push it up to new all-time highs. Like, I suppose if everybody in society moved over to using Bitcoin, then maybe you could get to some of those crazy prices. But that will never happen because Bitcoin is simply unsuitable as the basis of an economy. Because you get like what's happening right now, right? Anytime that there's any kind of recession or decrease in the money supply, Bitcoin is going to decline 70 to 80%, right? So people are going to avoid it because of that, right? You can't use it for transactions. So where is the money going to come from? There has never been a time. Listen, this is a key insight that these people in the cryptocurrency world, they don't realize, but it's the effing truth. Like, what we know has been going on in the cryptocurrency community. This is the reality. There has never been a time in Bitcoin's history where there was a bull market that wasn't supported by widespread systemic fraud. There has never been a time in Bitcoin's history when it was in a bull run where that bull run was not being supported by widespread systemic fraud. When we had the bull run going up before the Mt. Gox crash, the thing that was causing it was that Mt. Gox was printing money, essentially. They were basically buying up Bitcoins with money that didn't exist and just saying that they bought it up on the ledger because they can do that because they own the exchange, they're the platform. And they had a little robot that was doing this stuff. And after they collapsed, this is why Mt. Gox collapsed, right? It was because it was widespread systemic fraud. The 20s, and then the whole bull run that we've had, 2017 to today, has been supported by widespread systemic fraud originating from Tether and now from other stable coins, DeFi, Ponzi schemes in general, propping that market up. Now you might say, well, if they've been propping the market up that whole time, why did we have the 2017 crash? Well, I think that probably what happened in that case was that the Mt. Gox well was out there selling, and the Mt. Gox well was probably single-handedly responsible for the 2017 crash. So actually, we kind of got lucky in that respect that there was a crash and it moved back up. Because imagine if we hadn't had that crash and where Bitcoin would be at today. It's actually a little crazy. Or if they hadn't have crippled the blockchain where Bitcoin would be today, right? So I guess what I'm saying is that the fraud could have been so much worse, but society got lucky. Doesn't need to go to all-time high as long as you can then start investing in better coins after regulation. No, there's not, because again, the only reason that anybody buys it is because you get an extreme return on something that continues to go up and up and up and up, right? Once you get an all-time high is in, like look, okay, I give you an example, okay? I don't think that people understand this, right? This is our recency bias. Okay, let's go to Trading View. And who do I want to do? I think Cisco is probably good. And then we'll do 1 week. Okay, well, maybe when you have these assets like this, like listen, everybody was saying, oh well, we had a little bit of a decline over here. Where is it? Sorry, let me get my marker correct. Oh, you had a decline here. 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 Look, you buy the dip. You buy the dip. And then one day it stops working. So people say, oh, this is great. You buy the dip here. You buy the dip here. Guess what? Like, you never get paid for that. You certainly never get paid as much as you got paid back in 2000. Right? When things like truly collapse like that, they never come back. They almost never come back, guys, because everybody's already been burned. Everybody that was available to get into that asset, they've already done it. Do you understand? Where's the money going to come from? Okay? Like think of the Bitcoin ecosystem like like here is all of the money in the Bitcoin ecosystem, right? And this teeny tiny little bit right here is actually the real money, right? And all of this is printed fake money. This is all fake. Okay? It's like 90% of it is fake money that doesn't exist. Okay? When all of that goes away, if this part right here, the amount of money that's in the market, if it's double what it was at the peak of last year, guess what? You're still 60% from all-time highs. Right? The world is running out of suckers. It's not even that they're running out of suckers. It's just like you got every sucker in this thing. It wouldn't give you the numbers that people think Bitcoin is going to go to. Right? There's a larger fundamental problem here with Bitcoin, which is that it doesn't actually have it has fundamental value, but the fundamental value is the ability to make the transactions. And guess what? Other things can do it for less. Right now in Bitcoin, you're paying quite a bit for a transaction, and it can be done for practically for free. In the future, transactions will be practically free. It'll all come from stablecoins. It'll come from government stablecoins, right? But it won't even really be a blockchain. It'll just be like digital money that is open in public, but centralized. Yep. I'm telling you, it's coming. Web 5 is coming. I saw that. So I haven't looked into Web 5 too much, but this again is like Jack Dorsey is just, he's a true believer. Doesn't mean it's going to work. The only considerable amount of money I've put in crypto was in startup companies only. No. Yeah, I understand what you're saying. So what you're saying is, okay, we had the .com bubble and then it crashed, but if you bought the dip off of that crash, the internet ended up becoming a bigger thing than all of that. And, Amazon, you would have been rich if you had invested in Amazon at that time because they were the ones that won and yada, 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 right? Okay. That's not going to happen. Bitcoin is not the internet. The internet was a valuable thing that had transformative, it completely transformed society and the way that our economy worked. Okay. Bitcoin has already had that moment. Okay. Bitcoin had that moment and it collapsed and it came back. And when it came back, it failed to do the thing that it set out to do. And so instead of giving up on it and going, okay, it doesn't work, they changed it. They said, okay, let's not make it transactions. Let's make it a store of value. And then what happened? That failed too, right? You understand? Like it's not coming back because Bitcoin can't do what they want it to do. And as time goes on, more and more people will realize that. Right? Jack is not in his right head. Is something going on? And no. That looks like we're fine. Why is... I didn't see that. Did he delete that message? Or is he... I don't know. That's weird. Message. Wait. Did you sell today? I sell what? The S&P 500? So what I did today, NASDAQ Killer, was I tried to bring the spread of the micro treasury futures in, and somebody bit, and I was able to make $15 off of it. Okay, cool. I think you're being too much of a doomer. Yeah, I am a doomer, 100%. Because really, the reality is that I think that this is bad for society, and I want it to end. I think it's done. Centralization of power is no bueno. Look at communism. Yeah, but a decentralized current. So really, we have to get to the heart of the issue here. Really, okay. The heart of the issue is that you believe that a currency that is not controlled by a government would be better and better for the people and better for society than the systems that we have today. And that's not true. The government having control of the currency is the greatest financial innovation of the last millennium. Okay. Before you had governments that actually regulated the currency, you were basically just at the mercy. Well, it's like you have in Bitcoin today. Like seriously, look, Bitcoin did what they wanted to do. Is just that what they wanted to do doesn't work, right? They went and they created an ecosystem where you could be your own bank and they had lending and everything, right? But because it's not run by the government, there's nothing to protect you. And so these people, they just print money out of thin air and then they collapse. That's exactly what happened. There were wildcat banks. There were wildcat banks. And what just happened in the last year is basically what has happened every other time in history that this has ever happened, right? How did we get away from this? The way that we got away from this was giving the government responsibility for managing the currency. And then we took it a step further. The next innovation that we made was we developed a system through which a group of governors appointed by the government can manage the amount of money in the system so that when we need more liquidity because of a financial crisis, we can get it. And when we need to reduce the amount of liquidity because we're in a bubble, we can get it. And that has reduced the amount of financial volatility in the United States. If you go back to like the whole period from 1830 to 1910, basically, when there was no central bank in the United States, was the most economically turbulent time in the United States, period. And we were only able to build into the industrial powerhouse that we are today because of that financial innovation of being able to manage the money supply. So the whole premise, what do we call it? Libertarian wet dream premise behind Bitcoin is wrong. The whole thing is wrong. We live in a better, safer, more stable society because of our monetary system. And if you take that away through Bitcoin becoming the thing, all you're going to do is create more economic hardship for people because you're creating volatility, right? It would be worse because back in those days, the problem was that like a wildcat bank would do whatever they wanted and would cause problems, right? But now you have a situation where not only can those individual organizations cause problems, but you have a currency that's deflationary, right? So anytime that there's an economic crisis, it magnifies it. It's not normal to have an 80% drawdown, guys. 80% drawdowns shouldn't happen. 50% drawdown, okay. 50% drawdown, I'm okay with that in the stock market. 80% drawdown, you did something wrong. When every cycle ends in an 80% drawdown, that's not sustainable for an economy, guys. Too much destruction caused by that. No, that's wrong. I already covered that one, though. I assure you, crypto will stay because of technology itself and the interest in investing it. If you believe that, in my opinion, you don't understand the technology. Because the reality is that the technology behind Bitcoin is shit. Okay, like it was a cool idea. It was a cool application of an idea. It was interesting, but the reality is that it's extremely inefficient. And almost any other kind of technology that is available to us today to create a digital currency is more effective and more efficient than Bitcoin. Like literally, seriously, every altcoin that has been created was created because Bitcoin did something bad and they thought that they could do it better, except for Litecoin. Litecoin is the only one. I guess they said, well, we can make it smaller, but Litecoin was and these shit coins are kind of just like Me Too's. But everything else, Ripple, Ethereum, etc., They all exist purely because Bitcoin sucked and they wanted to make it better. Seriously. So the reality is every technology that you could possibly use, right? And then the problem is then you're just looking at then we just get to the blockchain itself. Okay, so one of these coins, they'll use blockchain technology and they'll be better. Well, I'm telling you, the government is making a technology right now as we speak, and it's going to be better in every way. It will be able, the amount of flexibility you will have in creating contracts will be better. The energy usage of it will be better. The amount of transactions that it can handle at a time will be better. The amount of time that it will take to confirm your transactions will be better. And on top of all of that, it will be government sanctioned and will still allow the government to manage the money supply, etc., etc., etc. There is absolutely, in that world, there is no reason for Bitcoin to exist because it would just be a shitty version of something that already exists. The only reason for Bitcoin to exist in reality, because the technology sucks so bad, is because of this libertarian wet dream of a decentralized currency. And a decentralized currency is a bad idea. So it is eventually, it's going to be worth practically nothing at some point in the future. Okay, 100 years from now, Bitcoin's not going to be worth jack squat. That's just the reality, man. You can come and call me like a doomer and like you just don't understand it. But here's the thing. I've been watching this thing from day one. I'm a technology guy. I'm a finance guy. I am one of the most ideally suited people on the planet to understand this thing. I put a lot of time into understanding it. I understand it better than most of these people that are going and creating these crazy systems and making millions of dollars off of it. Like, seriously? Because I wouldn't do the stupid shit that they're doing, okay? I understand it. The reality is it's just a bad technology and a bad idea. I love you even if you're wrong. Thanks, Hydro. Well, there are some cryptocurrencies that had some interesting ideas. I mean, Ripple was interesting. Ripple was efficient, right? But the problem with Ripple was that they basically tried to turn it into an unregistered security, right? That investing in Ripple was investing in their company. like here's the thing. There was a window in 2017 where a cryptocurrency like Ripple could have come to prominence and have become that decentralized currency. It would have been a problem, but there was a window where cryptocurrency could have become what its adherents wanted it to become, and we would have been able to see this dystopia I talk about where you find out that a decentralized currency is not so great to base your economy on. Okay. Is it possible that it could have happened? Right. But then Bitcoin basically crippled the blockchain and we had the 2017 bear market. After that happened, that ended it. Right. Like the opportunity was lost. Right. Now, the reality is that in order for the coins are so far behind and it will take so much time for them to catch up to a spot where they would be usable and they could build that ecosystem. They're not going to beat the government to it. The government is going to beat them to it. Why is the market poo today? I don't know, man. So let's come back now that I'm done pontificating on Bitcoin. Let's look at the market that we've got here. Okay, so first of all, here was where I got filled in my treasury trade. The market appears to have continued going. So I actually, if I had held on, maybe could have made even more money, but I wouldn't want to do that. That first opportunity they give me to get out, I'm going to get out, right? But clearly somebody was doing something here and knew what was going to happen and said Sure, well, I'll throw these guys a bone. So I appreciate it. Interesting that we brought the spread in again, but then the offers don't follow down. Just kind of curious to me. Why you're using one asset to judge an industry? Well, that's what I was saying. It's not like a cryptocurrency couldn't have come about that would have been not shit. It's just that it's too late now for that to happen and get hold before the Fed coin comes, right? I digress. Anyways, but we want to look at the larger market here. And what I see here is that there was a little bit of a pullback in oil, but oil continued to dip, and as oil dipped, the treasuries are moving higher. Now, that could have been the large meta order for the quarter end rebalancing that I was kind of predicting at the beginning of all of this. But because I had already made a good trade in the 30-year, and like honestly, the amount that it moved back here in the 10-year wasn't that much. So it wouldn't have justified the risk that I was taking anyways. So I'm okay with not having traded it. But I just want to note that it seems like there is some correlation between oil and treasuries today. Now, the S&P 500 hasn't really been following the treasuries so much. Treasuries haven't been following them. There has been movement in the dollar, though. There has been some movement in the dollar and in gold. The movement in gold kind of looks like its own thing, though. And Bitcoin, as we're talking about it, actually there has been in the last hour or so another little dip lower, somebody selling, but nothing too dramatic. I think in Bitcoin, I want to see like it just collapse and you know, you could just sit and masturbate to Bitcoin just absolutely collapsing down to 10K. But I'm thinking that it's probably going to be a slow bleed, because there's these guys that are hodl in Bitcoin, don't want to sell it, and they're going to have to be forced out of the market, right? I just hope Doge goes to at least $1. No, that was the other one. Was Doge had an opportunity maybe to get to $1, but it came up short, right? Like that was his chance. Because of the highly inflationary nature of Dogecoin, it will never be able to reach $1 again now. Bitcoin 3,300. Oh, geez, Morgan, man, where are you getting that number from? Oh, that is even worse than I'm just looking for 11K. You say 3,300? Woo. That sounds ugly, man. But I think it's very much possible. Like again, the bigger thing here in Bitcoin, like in the short term, the key thing for Bitcoin is that the environment is very unfavorable to the asset. So even though they're doing everything they can to try and prop it up and everything, it's probably going to continue to bleed. There's just going to be a slow bleed. If I was those guys, you know, there's these people, they've been giving people loans and all of this sort of thing. Like, I get it. You think you're JP Morgan, you're going to backstop the economy and then you're going to make money when it goes back up. Now's not the time to do that play. I think that Bitcoin is still overvalued at these prices, and they're overpaying for something, and it would be better for them. It would be the cryptocurrency ecosystem would stand a better chance at surviving if they just let it collapse down to 10K as quickly as possible. Seriously, I'm that bearish on it. Probably overly bearish. But you can tell, right? Like, here's the thing, okay? I've run across, on my time on this channel, a number of other channels that were doing dodgy things, right? Usually it was just like, I didn't like they're kind of doing things that I feel like are false advertising or just not accurate, not in the best interest of their viewership. But I've also run into people that we're just like straight out scamming their viewers. And these people that I feel are just straight out scamming their viewers, where they're basically asking $1,000 for indicator packages that most of that stuff is available for free and doesn't really help you at all. And then they got butthurt because my channel was doing better than theirs, and I wouldn't let them in the Discord because they were trying to promote their crap. So they got really butthurt and started attacking me, and so because of that, I've developed this like I want to call it like post-traumatic stress syndrome of when I see people getting scammed, it like super bothers me now. And I see that in the cryptocurrency community. What happened in the last year bothers me so greatly because I can see the societal cost it's having. And so I'm very bearish. Yeah. And I can be more bearish short term than I should be sometimes. I still think though that in the long run, the current macro framework is not good for Bitcoin. It'll probably continue slowly. And I should probably stop talking about it now. Anyways, so I was going to make a tweet. Never did. See, I told you gold is freedom. No. Gold hasn't been performing very well, man. It has not. You know what? There was a really great jump at one point today. Came all the way back in gold. Came all the way back. I don't know what you do. There's a reason why kings are kings. It's because they have gold in their castle? Maybe. Having large amounts of gold as a government or a person in power does provide some power to you, but as an investment for a regular person, as a long-term investment, it doesn't make sense. The return that you get on it isn't very good. You can do it as a trade or as a hedge, a short-term hedge, but this cycle hasn't worked out. Okay, I need to write this tweet to the CME. Yeah. So, I never got into this thing about with the micro treasury futures. I didn't say, I don't, well, I mean, I said a lot of stuff about it, but I don't feel like I got the message out very well, what I wanted to say. I've always thought, wouldn't it be nice to be in the pits or, to be in a new market and be one of the people like building that market? when you don't have to deal with, thousands of robots always cutting in line in front of you, right? What if you could be in a market where you really had the ability to actually be like the market maker, offer a price that is advantageous for you, then take it back out when it reverts back down. And today we did that, and it worked, and we made money. And we were providing a service to the market. We brought the spreads in. We're successful with it. So that's really exciting to me. That's like a lifelong dream come true. It was, it was kind of funny. Like one trade with that doing that, and I'm happy. Well, we could continue to ramp that up, right? I hope that this is what I'm here for, man. That's my job. Bring in the spread in the micro treasury futures so that we can start more. We can trade spreads. We can trade the yield curve rather, so that we can trade the yield curve without so much trading costs. And we're gonna do it. We had success today. You should help me, right? Get your one lot. Put your one lot out there. Bring that spread in, man. Let's do this, right? And there's still like 20 ticks, right? You could bring that in. We could bring that in. So, you're welcome, CME. Oops, it's not a hashtag. This is interesting looking back on that one. So where do I have it? I have it over here. Okay, so and they actually brought the spread in quite a bit here. But now it's widened back out a little bit. If I bring in my interval so that we can see a little bit more here. Yeah. And yeah, you can still see the location where I got so I got filled somewhere in here, I think it was. And then this was when they brought the offer down. You can see here, somebody was still willing to offer a little bit here. Maybe that was the bid. I don't know. It's just kind of interesting how it's played out. Can you see, though, how it's more the offer that seems to have been the one working it? See that? Whereas the bids have just kind of been, probably because most of these offers aren't getting filled. But it looks like that the market maker was playing more the offer side. So that's interesting how that played out. It was really fun. I hope that I get as lucky as in the future. Or that we're able to work out a better way to find true value in the treasuries, man. We got to work on that. Like I said earlier, I talked to Trading Technologies. It was going to be like $300 plus whatever the exchange said. I think I need to talk to somebody at the exchange. So we'll see. We'll see. There's got to be a cheaper option. Or maybe, hey, maybe we can chat. I don't know. Maybe the CME would be interested in Selva now, you know? And they'd be like, oh yeah, we did do this for you as long as you promise to provide this liquidity and so forth. Because we do want the spread to be brought in. Sure. Well, it is 8:59, so I guess that's time for me to go. By the way, how many people did we lose from my Bitcoin rant? Oh, it actually has been pretty good. Been a good stream. Hey, and also thank you guys for the likes. We should probably focus on the likes again, getting ourselves up to 16 likes. We used to do that. If you haven't hit the like button, go ahead and do so. But really, if you want to help the channel out, make sure you visit the videos, comment on the videos, man. Commenting on my videos, that's I love it, guys. I appreciate all your comments. Read all of them. I tried to respond to them, everyone that I can. I appreciate that. And then I have a bunch of stuff in my video description. These are all things for you. Like, honestly, like these mugs. Listen, you're here every day. I feel like you should have something to show it, you know, that you're one of those warriors with me. So we got the mugs. That's for you. Got affiliate codes for the products that I'm using. Help you save a little. So that stuff's really all for you. So if you're new, make sure you check out, or you don't have a News Squawk, man. If you don't have a News Squawk, check out Financial Juice. Have the code in the video description below. I will see you guys tomorrow. Friday should be interesting. Remember, we got a long holiday weekend because we got the 4th of July coming up. Oh, I'm excited because I get to take the baby to a parade. Oh, it's going to be so much fun, guys. So I'll see you tomorrow, though. In the meantime, stay profitable, friends, or at least don't blow it all.